What's up, everyone? It's Justin here with the Real Keeper Home team at eXp Realty, and welcome back to our channel, Everything Jax Real Estate. In this video, we're going to be going over the market update report for September of 2023 as it pertains to Jacksonville Beaches and the Jacksonville Southside area. So we're going to go over the active to pending ratio, or pen to active ratio. We're going to go over the amount of homes that were listed. We're going to go over the amount of homes that were under contract, the amount of homes that sold. We're also going to dive into what the average and the median price points are for the actives, the pendings, and the solds as it pertains to September, as well as the last 6 months here in the Beaches and Southside area. So definitely stay tuned, because when I come back, you're going to hear what I have to say. All right, welcome back. Before we get started, don't forget to like this video, subscribe to our channel, and ring that bell so you get notified when we post more content like this in the future. Also, if you see anything that I discuss in this video that you have more questions on, one of the things you can do is you can actually go ahead and put a comment down in this video, and we will see that and we will respond to that. Whether if it's something that you had questions on, something that you may think maybe I didn't go over that you want to know more about. So definitely don't hesitate to leave a comment below, because we love to get those comments, love to see what it is you have to say. So as we get started, you're going to see here, the first thing we're going to go over is the pen to list ratio. So what you're going to see here is that we had 703 total homes on the market in the Beaches and Southside area for September. Of those 703 homes, 262 of them went under contract, which left us with 441 homes that are still out there for sale. This gives us a pen to list ratio of 37.3%. To give you an idea, the higher this ratio goes, the stronger it is to be a seller's market, because what it tells you is that there's less homes on the market because a lot of homes are going under contract. So as that percentage goes up, it just means there's less available homes in relation to the overall homes that were on the market for that month. So the thing you can see with this is the market is being described as mildly active. This has been a continuing theme from past months, really for the past year and a half. And we do see that this is probably going to be the case as we go in the rest of this year. Obviously that we'll monitor, but mildly active is still great for sellers, and it still can be good for buyers too in the right situations. So when we take a closer look, you will see here that homes in the $400,000-$600,000 price range had relatively the largest amount of homes that were under contract. This is pretty standard for the area, and this is because most homes in the area are going to be predominantly in that price range. You'll also see that homes in the $400,000-$600,000 price range were the majority of the homes that were still actually out there for sale. So it makes sense, if you have the majority in that price range for sale, a lot of times you may have the majority of those also under contract. Now, one thing that I want to key into here is the median list price for all the homes in this area was $629,950. So even though the majority of homes was in that $400,000-$600,000 price range for that bracket, we still had overall more homes above 600 than below 600, which is why the median fell above $600,000 at call it 630,000. Now the next thing we're going to look at is we're going to look at this graph. This graph measures properties for sale in relation to contracts pending. As you're going to see, properties for sale, that line is actually going to be higher than most the graph below. Compared to contracts pending, there are a couple areas where contracts pending gets very close. And what this tells us is there is a good separation for how many homes are actually available in these price points in relation to how many homes are actually under contract in those price points. Now, one thing to key into here is anytime you see the green line, contracts pending, exceed the black or blue line, depending on how it looks on screen, which is properties for sale, that's going to give you an indicator that it's a hyper seller's market, because in essence what's happening is there's more homes going under contract at that price point than there are homes still available. Now next down below, we're actually going to now look at the number of sold homes. And what we're going to see is for the past 6 months, there has been 1,264 contracts that closed, or sold homes for this area, with the median sold price of $475,000. So even though homes are being listed, 600 plus, that 630,000 range that I already discussed, the majority of homes that are selling much lower, median range of closer to 475. So it doesn't mean we're not seeing prices higher than that. It's just, we're actually seeing that there's more homes selling below that 600,000, which is pushing that median price from 630 down to 475. We also saw that there was 246 homes that failed to sell. Now, fail to sell can mean many different things. And I hate to ever put blame on one entity, but sometimes it can be the seller, sometimes it can be it can be the agent who's listing the home. Sometimes it can just be neither. It could just be the situation that fell into the seller's lap, so to speak. And what I mean by that is sometimes sellers, they get orders to have to potentially move somewhere else, and those orders change. But when those orders change, they end up staying where they're at, and they no longer have that need or that desire to sell. So sometimes that can be it. Sometimes it could be the condition of the home didn't match the price, and therefore didn't sell, and the seller took off the market. It could mean that the price was too high for what buyers were willing to pay. It could mean that the listing agent may not have done great with their photography or marketing the property, and so therefore it may not have sold because it didn't get out to enough eyes, and therefore not enough buyers even saw the home. It could also be just a factor of multiple of these factors, to be honest. So definitely something to key into, but realistically speaking, you're always going to have a certain amount of homes that fail to sell. It's not a situation that's bad to see. What you obviously don't want to see if you're a seller is you want to see that number skyrocket per se, because then it's going to tell you that okay, potentially maybe people aren't selling anymore because there's just enough buyer demand out there. At 246, we're not seeing that. It's still a very healthy market for buyers and sellers, but that is something we will monitor in future videos. Next up, we're gonna look at median days on market. And what you're gonna see here is the median days on market for the past 6 months, which is what we're gonna start off with, was actually 27 days on market. So the median price was $475, but the median days on market was 27 days. Anything under 30 is a very healthy market, and what it tells you is that homes that are going under contract are selling very quickly. Now, in relation to that, when we look at the last 30 days, you're gonna see that the median price went to $485, but the median days on market went to 31. So on one end of the spectrum, sellers are getting a slightly higher price, which makes sense because the market has appreciated a little bit this year. But on the other end of the spectrum, you're seeing that it's taking a little bit longer for most homes to now sell. So that'll be something to monitor, because realistically, when you see those two things both increase, it doesn't always translate to that being a continuing theme. Realistically, what you tend to see is you may see that prices may come down some as far as median sold price, whereas the days on market actually goes up, or vice versa. So that's something that we're going to monitor, because if we see both keep going up, that's something that you're not going to typically see, and so this might be an outlier, but we will monitor that for future market updates. But the good news is if you're a seller, you may have to wait longer, but you're going to get a higher price. Good news for you as a buyer, there will be more options because homes will be sitting a little bit longer, so you don't have to necessarily move on something ASAP. Now, we always say if you like it enough, the whole joke is, if you have to sleep on it, you might not be able to sleep in it, but realistically, you do have some time now, which is something that we couldn't say, the last couple of years. So next we're gonna look at the median list to sales ratio, which for this area was 98.3%. Now 98.3% means that for every $100,000 in a house that someone's trying to sell, they're getting $98,300 of that from a buyer. So again, 500,000 is going to put you, I would think, it's going to put you somewhere in the high fours, as 480 or so. Again, check my math there, but somewhere in that range as far as what you're getting in a contract price and closing for. Now, one thing to monitor with that is, does this percentage go up or go down in future months? I can tell you right now, it's actually gone up a little bit compared to a couple months ago, and all it tells you is that buyers have to give sellers a little more of what they're looking for, or sellers may not necessarily be pushing their prices as much as they used to be pushing them. And so therefore there's less negotiating needed from a buyer because homes are priced a little bit more appropriately for what buyers are wanting to pay. So again, something to monitor, but obviously 98.3% is still much better than in previous years where we were seeing 100 to 101% here in the area, even a little bit higher in certain pockets. So yeah, 98.3% does give you the ability as a buyer to negotiate some, and as a seller, it still means that you are still getting close to your list price. Also, the absorption rate for the area for the last 6 months was 2.1 months of inventory. Again, that just means that for every, if no new homes hit the market, we would be out of homes to sell in 2.1 months, roughly, call it 65 or so days probably. Something to monitor, because in an equilibrium market where it's not a buyer's market or a seller's market, that number is going to be closer to 6 months of inventory. Anything over 6 months of inventory is going to be considered more of a buyer's market. So at 2.1 months, we're still a very heavy seller's market, but definitely something to monitor, especially as we see rates increasing and potential for some buyer demand to slow down as we go into some of the more fall months of the year. Next up, looking at the graphs down here below, we're going to look at median sold price and median days on market. Now, these are not averages. That is one thing I want to definitely highlight in this video. These are not averages. These are just median, price points, median days on market. So it's going to look at obviously all the homes that have sold, and it's going to give you where does that median fall. The average could be more or less for these, but we're measuring medians for this exercise. So for median sold price, you're actually going to see that in September, we actually were higher than August, but we were lower than June and July. Now you may say, okay, that means that market's coming down some, right? Potentially, but to be honest, a lot of this comes down to typical seasonality trends. And typically you're gonna see May, June, July normally be higher months because of the fact that a lot of people do tend to sell. As you tend to get to the August, September, October, November months, less people tend to sell. And so with there being less options, it all comes down to which people are selling and what price points that puts them at. So for the median sold price at just below that trend line of, call it 480, it's still a very healthy price point, something that we will continue to monitor as we go into October, November to see how it changes. But it is less than June, July, but more than August. So definitely something to kind of look at to see, okay, is it gonna start going back more the route of August, or are we gonna, which to be honest, that's probably what I would expect to see as we see some seasonality trends. But again, does it go the route of June, July and come back up closer to that 5 to 520, maybe even higher price point for the area. Now, median days on market for September, you were just below the trend line of, call it, 30, 25, 27 days. Realistically speaking, obviously we are seeing that just like with the sold prices with days on market, June and July, you did see those days come down because that is a busier time of the year typically for buyers and sellers. However, as you've seen with August and September, we're starting to kind of go back up with days on market. And realistically, as we go into October, November, December might be an outlier, so we'll get to that in future videos because it's seasonality trends here in Jacksonville. But as we go into October, November, you may actually see those days on market start to increase again, especially as we see interest rates going up, prices not necessarily coming down to necessarily match those interest rates going up. So definitely something to monitor. Lastly, we're going to look at how are different price points, different brackets for the area trending. As far as absorption rate, which again is a measure of how much inventory there is in those brackets, in those price points, which again measures, okay, how strong of a seller's market it is versus how strong of a buyer's market it is. And what we're gonna see is realistically, if you're at 2.4 million or less for the brackets, the majority of those price points are gonna put you in what's considered the red. And the red is gonna be a very heavy seller's market. And for certain price points, like 0 to 200,000, 200 to 400,000, 400 to 600,000, you're under 2 months of inventory. That's a very heavy seller's market for sure. And so something to kind of keep an eye on as we go into future months is, do those numbers change? Do the reds start to go more to becoming oranges? Do the oranges start becoming more yellows? Do the yellows start becoming more teals? Or do some of these oranges go back to reds? One thing about as we go into the fall months is, yeah, demand sometimes slows down, but supply sometimes also slows down. So if less people are selling, it may not necessarily matter if less people are buying because the numbers won't change. That's one thing sometimes we have to always understand is, okay, rates do affect buyers a lot of times, but they do affect sellers too. Especially when you have a lot of sellers who had some low rates that may not necessarily decide to sell now, may decide to wait it out into next year when rates are expected to come down some. How far? We'll find out. But they are expected to come down some at some point next year. So a lot of sellers may decide to hold off for that reason. So therefore, we may not see the absorption rate for some of these brackets really go up much at all. That being said, typical seasonality trends would lead us to believe that we should see a little bit of movement back to buyers' direction. But that's something that we will monitor in the future market update videos for the Beaches Southside area. So that's going to do it for this market update video. If you liked what you saw here, definitely, like I said earlier in this video, please like this video, subscribe to our channel, and ring that bell so you get notified when we post more content like this in the future. One thing we pride ourselves on is we want to be able to help give people who are not from Jacksonville and people who are from Jacksonville a better idea of what's available out there, as well as a better idea of what's going on with the market for these different respective areas. So definitely would love, for a subscription and for a like. And by the way, If there's anything in this video you want to further discuss, or anything that I can do to help you with your home search here in Jacksonville, my contact information will be down below in this video. Please feel free to reach out to me, or you can even put a time on my calendar or my Calendly, so we can hop on a one-on-one Zoom call, more of a virtual face-to-face meeting, so that way I can help answer any questions you have, as well as if you are deciding on potentially coming to Jacksonville or making a move here, I can help kind of guide you and figure out what areas of Jacksonville make the most sense for you and your family, relatively speaking. So definitely would love to talk to you more, and until next time, I'll see you guys in the next market update video.